Welcome back to the Market Wolf, where I give you the best bear case, the best bull case, and I give you my opinion. I promised you we'd go over the dollar first. I want to show you the comparison between dollar and Bitcoin so you understand how the market generally operates. Here you can see Bitcoin in the orange line, and here you can see with the red and green candlesticks the price action for the dollar. Notice that when the dollar goes down, generally speaking, Bitcoin goes up. And generally speaking, when the dollar goes up, Bitcoin indeed goes down. And so right now you can see we've had this same divergence recently. The dollar has been on its way down, Bitcoin has been on its way up. Let's get rid of that so we can take a look closely at what the dollar is doing. Now, taking a closer look at the dollar, we can see that the dollar has been in a new descending channel, and it's actually falling back inside of a very old descending channel. It's much larger, and I suspect in the immediate short term, the dollar is going to try and backtest the top of this channel. Whether it gets top side of it or not will be important. It's possible this could be turning into a reverse head and shoulders pattern that could then launch the dollar. So it's going to be something we're going to have to watch very closely, because if that happens, then Bitcoin will be on its way down. However, this pattern could continue. It could backtest and fail here and then come back down even further, thus propelling Bitcoin up to the moon even further. So that's what we need to be watching on the dollar. In the short term, the long term, be paying attention. I want to take a very brief look at the S&P 500 now, because this is going to be absolutely crucial to understand what might be happening in the rest of the market along with the dollar. So as you can see, the S&P 500 has been moving up. We're very, very close to coming up to our all-time high again, although we are not quite there yet. But the thing I want you to notice most here is the amount of incoming volume we have, a lot of it over average. And you've got to understand, on my scale here for average that I've set, my moving average on my volume for is actually higher, because I'm looking for moves that are heavy on momentum to the upside. And so this is just a massive amount of volume we've had coming in. Now, in the short term here on the weekly, we do see that it is increasing price on decreasing volume, so we can expect a back test probably of this channel at some point, the top of this yellow line here that this used to be inside of. I believe that's a channel. That may just be, yes, that's a very large descending channel essentially that Bitcoin has been inside of, so I'd expect a back test there, then possibly a bounce out. The furthest we might back test down would be kind of like, if you would picture this as a reverse head and shoulders, and it does kind of actually look that way if you bring it into the daily time frame. But if you look here, this is about the neckline right here, I would say. So maybe about 444. If it were to break that, we'd be looking at some dangerous roads ahead of us. But more than likely, 438 is more of a reasonable place to be looking for a break, where it would be bad if we had a really solid break. And then you might get a bounce out of there. If we don't have a solid break of the neckline, you might get a bounce out and propel further up to some of these measured moves up to the upside. I would not be surprised if we were to try and hit this Fibonacci circle up here at a higher price. Just an amazing amount of incoming volume, even though we are going to have some back tests. And we can see here, just like this morning, we have had on the weekly time frame now another bearish divergence, as the 50-day has crossed the 100-day, and we have touched the bottom of the triangle there, that purple line that's ascending. We've hit that upward support on the triangle. Will we get support there, or will we ramp up? That remains yet to be seen going into tomorrow. The momentum to the downside could very easily ramp up if it breaks there. It doesn't have to go in a perfect arc and head back up to the upside. However, if it does get support there, we need to be looking again. Refer back to this morning's cast where I talk more in depth about this. But even if we did see this get support here and go up, even to back test some of these bearish crosses on the weekly, you would still be looking for a reversal pattern to form there, and you may not necessarily want to leap in. It just depends on what kind of percent you're looking at and what kind of trading you're doing. So pay attention to U.S. oil. I suspect with the stats that are coming out of Germany, China, elsewhere in the world, we're really slowing down durable goods. Germany's basically in a depression of sorts, and China is just, well, if you haven't heard about everything that's going on over there, you need to catch up. So also, I saw a post today that I want to put up here right now. I might do that. I can't remember his name, but you'll see it on the screen. And he made a very good observation about the M2 money supply and how we actually still have a ton of dollars out there in the market. And to me, that just means we walk this back briefly. If the Fed starts cutting again, watch out, because I think inflation will probably rear its ugly head again. Couple that with the fact that you would have real inflationary pressure, not this make-believe stuff where the Fed has printed off a ton of money, but true inflationary pressure where you have basically the big box store of the world, China, not really churning out a whole lot of product anymore, and they also put out questionable numbers. We know this. So, and then the fact that we know Germany is essentially the manufacturing hub of Europe, and the dire straits that Germany is in at this point, it's only a matter of time before prices here really start to ramp up in the States, in certain sectors of the economy. So it's going to be something to keep an eye on. And so yeah, thanks for putting that out. He's a friend of mine. Please follow him over on Twitter. He followed me today, and I just think he has some very good observations over there. On the weekly time frame, this is not the best look in the world for Quant. That's a very high wick right there. This could mean further downside. Again, this morning I said we're going to touch down here probably on this uptrending support for this bull flag that we've been sitting on. I just think that when you really look at Quant, we have had so much incoming positive volume that's way above the norm. I don't think that anybody came into this area looking for a sell. So likely what will happen if we do backtest, if we do break this bull flag structure to the downside, you're likely going to see us visit roughly about the 119.48 area. And you could go a little lower into this order block area right here. That's for sure. It's a great buy zone, and I think we got plenty of support with volume. So if Quant does decide to backtest that far, then that's what we can expect. We'll take a look at the 3-hour time frame just so we can take a look at this bull flag and see what's unfolding here with Quant. And the other thing that could be happening here for your bull case, that's your bear case where you break down if you break the bottom of this bull flag. But I would say that the bull case is that it holds this, and the MACD on all time frames really starts to cycle and reset itself, and then we prep for a big breakout. Okay, so off the top side of either one of these major resistance lines here from the bull flag, going back pretty darn far. Now, one other thing I want to point out to you is that if we were to break down that bear case, this would be very interesting, because essentially I think we would get support on the top side here of this former descending channel we were in, and you might find yourself bouncing around in here, which is a wedge.